Hey, everybody. Welcome to the King Operating Roundtable. My name is Stu Turley, President and CEO of the Sandstone Group. And I tell you what, this is one of my favorite days of the entire week. We have Jay Young, CEO of King Operating. Welcome, Jay.
Thanks, Stu. Good to be here.
I'll tell you what, we're having a blast. And I'm still living on the high from last week on our trip. That was a big one.
That was a lot of fun. I mean, I've been on a lot of rigs in the past, and it's a lot of fun to be there to experience, man. Man, those guys are hogs, man. They're up there on that floor. If the wind blows in Canada, it blows in North Texas because there's nothing to stop it, man. There's nothing to stop it, and that wind blows and it's cold. Chandler was out there for a long time too.
Oh, you bet. Chandler, welcome. We're so glad you're here, and you're the man about town. We're going to be talking about you here.
Yes, sir. Yes, dude. Good to be here, man. Good to be here.
Hey, you did an outstanding job getting us all teed up for that trip. I just had a blast.
Well, good. I'm glad. I think it was educational for everybody, and I'm glad. I'm glad everybody had a good time.
Well, you know, Jay and Chandler, today we have a really good event today, and that is we're going to talk about some of the market things going on. Our buddy Putin, Jay, you and I do lousy Putin imitations, but we're going to have some fun at his excuse. And when we get to the point, Mudlogs, on some of the point, Jay,
yes,
we couldn't understand you a little bit. And some of our requests were how to explain Mudlogs. So I got some examples up there for you and Chandler to say, what does Mudlogs actually mean to an investor? And Jay, you were a cattle guy a long time ago, weren't you?
Me?
Yeah.
No.
No. Oh, well, I was. I shoveled.
Big hat, no cattle, or is that big? Yes. I was a big hat, no cattle.
My grandparents had a dairy farm, and so when I smell cow poo, man, that's money to me. So when you smell oil, that's money for you. All right. Let's get started here, guys. And we are so excited. We got everybody here. Let me go ahead and start this with saying, please ask us questions. We've got everything all lined up. We want to get your questions answered. We got the guys here. We got everything ready to go for questions. And let me share my screen here. And we're going to start with the presentation. So can everybody see the presentation here?
Yep.
All right.
Good job so far.
Covered this. Do not forget. And Jay, we want to talk about oil and natural gas. Last week or week before, you were on Fox Business. And I mean, that was a pretty good interview, Jay.
Yeah, thanks. Thank you. All they want to know is, hey, what's going on with oil and gas? And the numbers don't lie. I mean, when you talk about what the price of oil is going to do in the future, and you're not drilling in the United States and your rig count's down, the numbers don't lie, man. You can't take oil out of the supply system and expect the price to go down.
Jay, that's a perfect tee up for where we're going. We got 88.18 today. We got $5.42 on nat gas. Man, that was up. It was $4 and something this morning. So it's taken a big hit. We're going to talk about that with ESG here in just a minute. Jay, we talked about rig counts, and the rig count is 550 this week. And last year, 1 year ago at this time, 327. But you know what, Jay? You said this all along on some of your interviews. We need a lot more than 550 rigs going. So
yeah, you do. You need a lot more than that. You need capital coming into the markets. It's not there. You're not drilling. We're not going to have the oil. Oil price is going to stay strong.
Absolutely. And tomorrow, OPEC Plus is meeting, Jay, and what they're going to talk about is they're really heading up and saying, oh, wait a minute, we're going to go ahead and increase production. Jay, you and I have been talking about some serious problems about OPEC, about Saudi Arabia, Russia, Iran. They are not able to ramp up production. So they're going to be able to say, yes, we're going to increase 400,000 barrels, but they're not going to be able to produce it. So there you go. There's the supply issue again. And that's because they hadn't, even those countries that are state-owned didn't put money into it. How in the rest of the world are you going to be able to do it as well, too? So in the news this week, we're not, Permian oil, this came out by the EIA, Jay. Permian output forecast to be a record high in February. That's pretty darn cool. So, you know, our U.S. shale guys got to hit it out of the park for us in order to survive.
Yeah, the Permian will produce 5 million barrels a day. You know, the United States needs 20 million plus, and the United States is making about 11 right now, and 5 million of that comes from the Permian Basin alone. So 5 out of 11 millions comes out of the Permian Basin.
Isn't that nuts?
Also, 15,000 hurricanes in the last 5 years. So we're not talking about that. We're not talking about hurricanes right now. No, I'm sorry. We're not talking about that.
Oh no! You know what? I sure felt like I was in a winter wonderland last week on the rig. I froze my ears off.
That was cool.
And then, so also, we talked about geopolitical situations going on. We have Putin, and we have all of those things going on in Ukraine. Jay, we've been talking about Putin is not going to invade. He doesn't need to. He's looking for that checkmate. He's going to need Nord Stream 2, that pipeline, so that on the interview that you were getting ready for on the next one, Russia's 50% of Europe's energy, 70%. Russia supplies 70% of their natural gas. If they get the Nord Stream 2 done and approved, they're going to be at 90%. Jay, that's a stranglehold.
It is. I mean, whenever you're looking at anybody with a supply, it's like, you know, a lot of countries, and this is what a lot of people don't understand, is oil is so important to countries. It's not as important to us as it is to Saudi Arabia, Russia, these other countries that they may produce 8 million barrels a day.
Right.
But they're only using 3 or 5 million. They're selling 3 to 5 million in the world because the world needs 100 million barrels of oil. They may be selling 3 to 5. That's how they make their budgets. You know, that's how they control all their people, and they don't let them think for themselves. And that whole entire is another story, another time. But I'm just saying that's how they balance their budgets. When they have 5 million barrels a day and they are selling that all over across the world, that's the reason why the oil price is so high. And whatever they can to make prices higher, they will do.
Right. Their budgets are already planned, Jay. It's kind of like your wife and my wife. I think they call each other and say, our budgets are planned. You better make more money. So
absolutely. That's the answer.
Goldman and Sachs is saying 90. You and I have been talking for a long time about $90 oil. Now our numbers are showing 120 this year, and people are starting to follow along. Jay, this brings up why we say $120 with ESG. Let's go around some of these numbers. We just talked about Putin. Here's one, Jay. $180 equivalent for nat gas up in New England. You know what? It's because they won't approve pipelines from Pennsylvania. I mean, go figure that one out. Why would you want to pay U.S. gas producers at $5 instead of going to Russia? That's where the tie-in is. They're buying a good chunk of their LNG from Russia, and the end users are paying $180 equivalent.
Yeah.
Isn't that nuts?
It really is. It really is. This is exactly what happened to Putin in Europe not long ago. And you just see people, and I mean, this is not, we're friendly neighbors. I mean, we're doing this to put you out of business so we can make more money. I mean, it's a real game. World wars have been started because of oil. And you can see what happens in any country at any time when you take oil out of a country or you starve them or whatever, and how mad that makes them because they're paying more. I mean, it's like not long ago. I mean, you know, Biden is saying that it's OPEC's fault because oil prices are up. You know, I don't know, dude. I think that it's your pipelines, like you're saying here. It's your pipelines. It's your permits. It's your green. I say greener. He says green. We need to go green because we don't need to drill for oil and gas. We need to do something a lot better for ourselves and do something that is more better for the air and the economy and the. Oh yeah, okay, that's good.
Yeah, there's no question.
Good driving.
Yeah, there's no question, Jay. We got to get there. It's how we get there.
Yeah,
and
we will be greener in the future, definitely.
You bet. Hey, your article this week on Blackrock, it's pretty funny because Texas, they got in there, and Blackrock has been this big worldwide ESG investing organization. They put out a notice in last month, and they said, "Oh, by the way, we're investing in Texas-based companies." Let me get this right: Texas-based energy companies. It turns out they're investing in oil and gas companies, and they're not wanting to share it with all their investors. Don't you think that's kind of funny?
No, I don't. I think it's the same thing we're doing. We're ESG, baby. King ESG corporate. I mean, it's like, hey, any way you can find an excuse to put money to work to make money, there's a lot of money to be made in oil and gas. And I'm just kidding with you.
No, you're not. And you know why you're not kidding, Jay? Because you don't have to, because the EU has declared natural gas is green. And so
drill well in the Permian Basin, because you're drilling
right.
10, 12,000 foot vertical, you're drilling 10,000 foot laterals, and Chandler's drilled tons of those. But and those wells cost $15, $16 million. And you're getting a lot of oil out of the ground. But I guarantee you, at $100 a barrel, that works out pretty good. At 30, it doesn't work out so good. Economics are not there. Your internal rate of return is not there. So you need to push those higher oil. And since right now, Exxon, Devon Energy, Harold Ham at Continental, all these people are seeing prices, and I see Harold Ham's on our broadcast. Hello, Mr. Ham. But you're seeing these.
I'm going to give a call right after this.
Yeah, please do. But you're seeing that these higher oil prices and are making these public companies and all their shareholders saying, nope, don't drill, don't put any more rigs to work. Like Exxon makes $6 billion in a quarter, and they buy $10 billion worth of stock instead of drilling for oil and gas. And if you're like me, which I love the oil business, that's the only thing I do is the oil business. And if you're seeing these type of numbers, 80, 90, $100 oil, and economics are so much better, you'll pay out in 3 months, 6 months, 9 months instead of waiting 3-4 years for your money or whatever. They can't wait to put these wells. So they're finding all these different excuses of yeah, well, this is ESG is natural gas. Okay, whatever. Hey, as long as they'll they'll put the check mark down and I can go drill wells, they'll call it whatever they can.
There's a couple phrases that have been coined around here: greener and Putin as the energy czar of the world. So, when you take a look at that, take a look also at our article, Australia's greener policies. When you take a look at, there is a 100% direct relationship between printing money and inflation. And what's coming around the corner right now, take a look, inflation is really hit, and Powell's already said they're going to raise the rates. And so that really goes on into your other discussion. I'm not seeing any questions here, and we're going to roll into this next section here. Let me see if I can get, there we go. And you got to be smarter than the mouse, Jay. So when we were on the rig last week, I'll tell you what, I had an absolute blast. Chandler, you in the doghouse, man, I'm usually in the doghouse with my wife, but that was fun up there. And Jerry, I got tickled when I said, what are we doing? And I don't know if anybody on the podcast or the roundtable saw that. What are we doing? And Jerry goes, we're drilling a big hole. My kind of guy. and so, Jay, when you were running around out there, you were fun. You were in the middle of your element, and we were talking mudlogs, and we kind of missed you a little bit there. And I've got on the screen right now, these are just examples. I've got several other examples here in a minute. And tell us what a mudlog means to a oil guy like you guys.
Okay, so what a mudlogger does is he sits there on the rig and right beside the rig along the shakers, and he grabs samples every, 30 feet or so of every time you're drilling a well. He'll take a measurement out of the well, because the well is digging. Well, that means that the dirt's coming up to the surface. And so he's taking a sample of that, and he's looking to see what it looks like. Is it white, yellow, brown, black, orange? What color is it? Because then he'll figure out exactly. And Chandler, I'm going to ask you to finish up, because I'm not going to be able to tell everything. You're going to know something different about the Mudlogger than me. So follow up with this. But he says that it's a certain type of shell, or it smells like oil. I love oil stain on rock. And I smell the rock. It smells like oil. Oh, good. Hey, has an odor, And so he writes that down on this mud log, which is on the left there. And this is being done while you're drilling the well. Okay, so electric logs is one some of you showed me a minute ago. Those are electric logs. Those aren't running until after. But this is a mud log.
These
and
are
it tells you,
logs.
beg your pardon? Yeah,
These are
don't worry about
logs.
these.
Okay.
These are not, go back to the first, So that's what this is doing. You see how the well is, so you see how fast the drill bit's going? And if there's something that it speeds up the drill bit, it goes faster. That means there's more porosity, or particularly a zone. But you also have a chromatograph, which is it's like in the middle right there. You can see where you hit something at 76, around 7650 right there. Around 7650. All right, go to the right on that.
Oh,
Go to the right. You see how on the red lines, that's the chromatograph, and that's your different types of gas and gas kicks that you have. So it kind of tells you if there's a gas kick. Does that mean it's a commercial well? No, but there is gas in that particular zone. So that's your chromatograph. But all the different times while you're drilling the well, you want to know exactly, am I in the Cleveland formation? I'm in the Marvinton. Have I hit the Kansas City zone yet? Whatever zone it is you're going through, and you're drilling and you're taking these samples up. Chandler, what can you add to that on the Mudlogger?
I mean, that is a good explanation of it. I do not claim to be a mudlogger, nor do I enjoy mudlogs as much as you do, Mr. Young.
Man, I love it.
Jay has a fascination with the mudlogging trailer and all that goes on in there. And I mean, just as a personal, I guess personal preference on my part, I do everything I can to not talk to those guys and leave them to themselves, and they send the reports to us. But Jay absolutely loves them. I've got some rocks from the wolf camp in my office, and Jay comes in every day when we talk, and he picks one up and smells it. So, but in any case, no, they are getting cuttings as we're drilling, and we have a mathematical equation of where the rock is cut, how long that takes it to circulate to surface, which equates to what formation or what depth that comes in at. They take that sample of rocks, they put it under a microscope and put that into percentages as far as, at 6,600, we have 75% shale, 20% sand, and whatever, 5% lime or something. And
well, you also forgot to mention that they put the sample that you're talking about in the fluorescent lamps, but what you didn't say was you look at it, and if it's gold, it's a bright gold. That's where black gold came from. Black gold, Texas tea. That's where black gold came from, was the fluorescence on seeing the samples, because you can literally see oil in the samples from your black light. We do have a question. Do you want to answer the question now, or?
Oh yeah.
Let me see. What was it? How much work is needed before the well produces oil? When do you expect the well to start producing? Let's get to that in a minute. Let's go ahead and finish up your presentation.
And
Sir, did you knock that off? Okay. Or did I knock it off?
Yeah.
All right.
Okay.
Yeah. Those are electric logs. Those are done after you drill the well. What you'll do then is, after you drill the well, you've got casing in the hole, you do all that stuff. Then at that time, you'll run electric tools down the hole and they'll come back slowly and they'll measure exactly, what's in the hole and what's the caliper on your cement. And also they'll measure all different types of permeability, porosity. They'll measure all those different types of deal to see. And that's a better indication whether or not you have a well or not, or if it's the zone worth producing. But we're not doing that, or we're not concerned about, all we're worried about is the caliper right now on the horizontal. We're not necessarily worried about what zones are uphole and if they're going to produce, because we're drilling this baby horizontal. So we're taking this drill bit right here. As you see, casing, you see casing first, you put casing in there right now, and you go all the way down. You come back up. See the gray on the outside of the green where it says casing?
Yep.
All right, that's casing that's outside. You drill the hole, a bigger hole, drill a bigger 13-inch hole, and then you'll come up out of the hole and you'll drop 9 3/4 inch casing in the hole, cement it down, which is what you're done here. And then you'll take the drill bit and you'll continue drilling, and you're drilling right now. And now what Chandler's done is he's gone down like this, but he's also made a curve, and he's almost, well, tell me where you are right now, Chandler.
Right now we're at, we finished our curve section just because of a variety of different technical factors. We're where we want to be, but we finished our curve at 84 degrees. So we're almost horizontal, but those 6 degrees to get to 90, we'll finish with our lateral BHA. So we'll drill out of our intermediate casing, and then we'll be able to come in smoothly at 90 degrees with that next drill bit.
So Chandler, that'd be something like this coming in. If you're talking about 80 something, you're going to be going along like this.
You're almost flat. You're almost parallel to the parallel to the surface.
You're 6 degrees away from being horizontal.
Right.
And now what he's doing is he's coming out of the hole. I don't know if you're coming out of the hole right now. I'm at 77.59. I got my sensor here. It tells you how deep, how far, where the drill bit is. But you're doing that, and then what you do is you come up out of the hole. Then you're going to run this casing like you have right here. The gray. You're going to run casing all the way down to 7,700 feet, 7770 at 84 degrees, and then you're going to cement this intermediate casing. So you have 3 strands of pipe. You're going to have casing, which is your surface casing. You're going to have intermediate pipe, which will be set right now. When they go down, they're going down about 7,769.9 feet. And then you're going to come up out of the hole at 84 degrees. Then you're going to run intermediate pipe in the hole. It's going to go out 84 degrees, almost 90. And then you're going to come up out of the hole, run casing down. And then what you're going to do is you're going to get in there and have one drill bit, smaller drill bit, and you're going to go all the way out 5,000 feet, almost a mile, horizontally, 1,000 feet a day, 5 days. And then you're going to come up out of the hole and run more casing, which is called your production casing. You're going to run that out your 5,000 foot lateral. Is that about right, Chandler?
Absolutely. Yes, sir.
What can you add to that, or is there anything else you can add?
No. We're literally, like as Jay said, we are in the process of, we are about in the middle of the well right now. So things have gone well. Certainly battling the elements. If Stu, if you thought it was cold up there last week, you should go up there today because it's real cold. Anyways, no, it's going well, and we're excited to get this one down and move to the next one.
We want to
Lewis gave me Lewis gave me the face mask, the knit face mask. Oh my gosh, man, that was so unbelievable. Did
you give that back to him?
No. I slobbered all over it and everything. And he goes, I said, Lewis, I'm not sure if you want this back or not. He goes, Jay, yes, you're good. You keep it. You're COVID looking. No, he just said he said, you keep that. I said, okay, I will. I'll give it to you next time. I'll wash it. And he goes, no. That's okay. Just send me some money for it or whatever. You know.
I wouldn't want it back.
But I tell you what, that was awesome. And he was really a great guy. So right now, to answer the question on the table is how much longer, and then where do we, so 5 more days to drill after we get through with this. So it's about 7 more days. We should be 7 days TD, Saturday, Sunday, Chandler. And then we're going to come out of the hole, set cement. And then after that, we're going to move the rig and then go to the next well. But in the meantime, that 4.5-inch casing is going to cement, WOC, cement to dry. And then we'll come in about, when do you think, tell me when you're going to perforate that well and what happens after that, Chandler?
So for the well that we're drilling right now, the Irvin Sisters, I just pulled up my calendar. For the well that we're drilling right now, the Irvin Sisters, we are on the board with a frac company to frac starting the 14th of this month. So the 14th of February, the rig will be moved off, and 14th of February.
All right. Woo!
They'll start fracking.
Let's talk about what frac means real quick, because it's not the big earthquake looking fracs that they do in West Texas, but it is when you have your pipe out, your 4.5-inch casing all the way out, when you have the lateral. If I had I can do my drawing here. So when you have this, you have I could have just done this right here. That would have been probably pretty easy, just to kind of show you from my dependable.
Taylor, do you have some crayons for Jay?
And when you have this thing, you don't need it, right?
Oh.
So here is the formation. This is the formation right here. This is the formation. This is the Marmonton formation.
Cool.
Okay. Now with that Marmonton formation, you're setting, and there's your drill pipe. This is your drill pipe. That's your drill pipe on the left side. That's your drill pipe. And now you're sitting there with the drill pipe. And then what they're going to do, and they're going to put cement behind pipe. They put cement behind pipe. That pipe is sitting at 84 degrees at 7,700 feet. 7770. And then what they're going to do is they're going to come in here. They're going to come in here and they're going to go back in with a drill bit, and they're going to go all the way out 5,000 feet, 5,000 foot horizontal, 5,000 foot horizontal. They're going to go out. And when they do, obviously they want to produce. They want to produce all this oil, man. They don't want to leave a little bit behind. They want to put it, they want to get it all, right? So what they'll do is how many stage frac are you going to do, Chandler?
26.
26 stage frac. So, and 26 divided by 5,000 is what?
About 200.
Every 200 feet. Okay. So what you're going to do here is you're going to go in and you're going to frac every 200 feet.
Nice.
Every 200 feet, you're going to frac. So what you do is, how do you frac 200 feet? That's kind of crazy because you've got a long 5,000 foot lateral here.
Right.
But what you're going to do is you're going to come in here and you're going to perforate your pipe. You're perforating your pipe for 200 feet. For 200 feet, you're going to perforate your pipe. And then what you do is you send water out down there at high rates of speed. You send this water down here, and then what it does, it opens up your pores. It breaks open like a windshield, like a baseball bat on a windshield. It's cracking. It's going through these. Just imagine that water is traveling through these and breaking open the formation, going all out to the formation. Because what you want to do is you want to produce.
Jay, that looks like a tadpole drawing that I drew in high school.
Is it good? Hey, so here is the Stu. So makes him laugh so much.
Sorry, Jay.
He likes to. I guess he lives in Oklahoma or south of Oklahoma or something. He's anybody to talk to. So what you do is you perforate 200 feet, you frac it, because what you want to do is you want to produce every single bit of oil you can in this whole formation, right? So what Chandler says is we're going to put 26 different fracs on this well, 26 stages of 200 feet. So then what you do is you put a plug. And I'm sorry, I don't know how to do this better, but maybe there's a better one. But
it works, Jay.
And then what you do is you perforate the next 200 feet. You got a 5,000 foot lateral here, and you can put a 26 stage frac on this thing every 200 feet. That's 5,200 feet. So we're going to have a 5,200 foot lateral every 200 feet. Then now you perforate the pipe, because this is like a vertical well right here. All this is 26 vertical wells. That's all we're doing. If we get 30, 40,000 barrels of oil out of every vertical well, and we have 26 of them, how many barrels is that? 26 times 30,000 barrels. That's about 700,000 barrels of oil. That's what we want. We want to spend $3, $4, $5 million drilling this well and get 400,000 barrels of oil. That's the goal.
Hey, Jay,
We know the oil is there.
Isn't that great?
Yeah.
This is not wildcatting.
No, we're not wildcatting. We know the formation's there. Wells produce all around us in this formation. So we have the next formation. So what we do there is we do that, perforate, and then we send the water. Then we produce the water, or send the water down here, break open the formation, and just do the same thing. Rinse and repeat 26 times.
I got a great.
Go out there when we're fracking. Go out there, because those guys are pretty boring, because they do the same thing 26 times. You perforate, you send water down there at high rates of speed. You open up the fractures. You'll put sand in there afterwards to act as a propellant, a proppant, if you will, to keep the formation open. And then you put a plug in there, and you go to the next formation. And then at the very end, you'll drill out all the plugs, and then you let her rip, baby. You let her rip. And then that's when you have, 3, 4, 5, hopefully over 1,000 barrels a day, 2-3 million cubic feet of gas. And man, that oil and gas comes to see you. And that should take about, how long do you think it'll take? February 14th. Do you think you can frack it in the month of February?
Yeah, it'll take about a week. It'll take about a week to frack. So let's say we're flowing back all the water that we pumped for the remainder of the month of February. So we'll see first production into February, beginning of March.
Nice.
Okay, good. And then we'll get the March production, however much March production comes in, and we'll put that in, and then we'll get paid on that in April. We'll put that with our other March production. We have about 70 million cubic feet of gas and about 3,500, 3,600 barrels of oil with all the other oil and gas projects that we have. We'll put that in, and then with that, we have a check that gets bigger. It's going to be, I don't know about let me see, March production, April, May check, your May 20th check. I don't know if it's going to be, because it may not be a full month, it may be half a month, or we may have water coming out. Your check in May, June, July, over the summer, it's going to be 2, 3, 4 times larger. In my opinion, no guarantees. I've got money in this deal too. My wife's waiting for her check. But I'm just saying that it's going to be hopefully 3 times bigger than what it is right now, beginning in May or June or July. And then we're going to put one more well behind it, because you're getting ready to drill another well, right, Chandler?
Yep.
Right behind this?
Right behind that.
Why can't you drill 10 more? Why can't you drill 10 more out there right now?
I want to. You guys,
yeah, I'm sorry.
You guys show me the money and we'll do it.
Hey, show me the money. I love that line. It's kind of like, never mind.
Yes,
Okay.
That's great. That's great. All right, let's look at here. There's some more questions. Any more questions?
Steve Kong, how much more work is needed before a well produces oil? When do you expect to start producing, well producing?
We just said that. We just said that in March. Yes. Okay.
Agreed. When will we see their 30%? I think you just went through that.
I did. Yeah. Starting in April, March, April, May, June, July, where the checks will be bigger.
And
then we're going to drill 6, 7, 8 wells this year. We're going to drill 6, 7, 8 wells this year. Every time we drill a well, guys, your checks get bigger.
And do you sand to keep those cracks open?
Yes, we do that. It's just like what I talked about a minute ago. We use sand as a proppant to keep the format. The water opens up the formation. That's what it does. Open up the formation, the proppant. The sand acts as a proppant to keep the formation open. It acts like, a lot of pebbles in a glass or something. Put a lot of pebbles in a glass, and you can see how water can seep through. Exactly like what we do there.
And so I think James is saying, how long do the checks? I think we answered that as well too. And Jay, you also have, does this fund is using debt in addition to the money raised for the fund, and why use debt?
Yeah, it's a good question. I want to drill as many wells as possible. And if we do use some, well, I'm not using big high risk debt or anything like that. I'm using bank debt, reserve-based loan debt. If I can do that, I'm good. I like it. And I will use more of it because I want to drill more wells. The way you increase the revenue checks plus how you increase the value of the fund, is this a $200 million fund, $200 million fund? The only way to increase that is by drilling. That's why I love drilling. Love it, love it, love it. Drilling in an up market or a market like this is going to be great. Because if you don't drill and you just sit there, man, I tell you, it's going to be hard to make your checks bigger. It's going to be hard to make the value bigger.
You know, with the geopolitical stuff going on in the world right now, with the need for ESG, with low cost energy to the American market, I'll tell you what, Jay, it is cool seeing that the investors are on track to start getting their increase from these 2 wells. When we were leaving the well site on our tour, we went by, is it the casing or what did you call that well that was just about to get started?
That was the Shigota. That was the Shigota, which is the second well, and that was the cellar and the conductor. So that's the beginning section of the well.
So it's about ready, isn't it?
It is ready. We could move on there today if we wanted to.
Well, I'll tell you what, this is really
About a week
cool.
away from rig move. The big thing is getting this thing finished up, getting our casing in, perforating, fracking, getting the revenue up. We have
also have Jorge with a question, Jay. What's the current % return for the February check? I don't know that.
I don't know.
We'll have to get back with you, Jorge. We'll get with that. And if we're going to go through this, and if anybody still has any more questions, we're going to go through one last round robin. Jay, give us your thoughts on all this really cool drilling you got going on. Last thoughts.
Well, so the way I am and the way I've grown up, my great grandfather was in the oil business, 100 years. We've been in the oil business and we've seen a lot of drilling rigs. We've seen a lot of drilling. We've seen a lot of new technology come up because of what we're doing now. And there's nothing better right now than to be where we are in the place of equity, all equity up front. I mean, a little bit of debt, but a lot of equity up front. And let's go drill and drill and drill. And so what we can do is we can get ahead of the ball game and then use that as collateral to go drill more wells. So we're doing that right now. I see a question out here, Jorge. Yeah, do you drill multiple wells at the same time? Right now, we're not. We're just drilling 2 wells, one back to back. We're drilling wells in 4 different places this year. We'll be drilling 2 wells in Wyoming, 2 wells in East Texas, and 2 wells in Amarillo. And then we're drilling some in Colorado as well. So we're doing it different places. Now, what I'd like to do, and in the future, we will have the money and we will have the place to go and keep a rig running, and there's nothing more that I'd like to have is $1 billion company a year. And that's what these things do. If you keep 4 rigs running, all you gotta do is just keep 4 rigs running and you build $1 billion company a year. That's all it is. You got to find the right locations. You got to find and have the money to do it. But if you gave me the money, I could go build you $1 billion company because of what we do and how we drill wells. So yes, it's exciting. We've got a drilling budget right now of about $50 million this year. And we're gonna, and that's what we need. May need some debt. We may need some equity to get this thing going and go where we need to go. I want to see this as a $200 to $300 million fund in a shorter amount of time. Exit East Texas or something this year to give people their money back, and then just send you revenue checks.
I found this on the web.
Okay, so it's unbelievable.
I'll tell you what, that is pretty darn exciting, Jay. Chandler, when can we have the next trip? I really enjoyed it. That restaurant there was pretty darn cool too.
Hey, you tell me, Stu. This is our rig. This is our location. We can do whatever we want to. So we don't have to ask permission from nobody. So you let me know when you want to go, and we'll do it. You know, Jay, I don't know if it would be worthy of the same trip that we took this last time, but potentially something to think about with the 2 fracks coming up would be to do a day trip up there and watch them frack. Personally, I agree with you. I think it's really boring, but
Unless you're from Oklahoma State.
It could be, yeah, exactly. It could be worthwhile, and I think it would dispel some of the rumors around the myths of fracking.
Yeah. It is. I mean, once you see one and you see the pressures that they're putting on the rock and they're going through the whole process, everything, it's really neat. And these guys have done a lot of wells up there, so we're really excited to have them up there to get to the next level.
Speaking of ESG on the fracking, and one thing I want to dispel on folks that we get a bad rap on is ESG and the propellants used is incredible. A lot of the propellants, you can drink. So everybody thinks that fracking has got bad things in it. It's all got organic things in it, and then the water is treated just like up in the Colorado plant and everything else. It's treated and it's cleaner than a lot of people drink in the water. So, the oil and gas community has gotten a lot better, and we're right there following right along in that today. So, in fact, on our next trip, let's drink some frack water. I'm in. So
yeah, you do. You already know Oklahoma too much. Way too much.
Way too much.
All right, hey. Thanks, everybody. Right. Appreciate it.
Thanks, everybody. We will see you next time. And Jay and Chandler, as always, you guys did fantastic. We'll see you guys soon. Thanks.
Thank you.
Thank you.